all the debt that he went through, the stock price fell and it is now in just a single-digit rupees. So generally, we should try to avoid these sort of companies which have had a downtrend for more than 5-6 years. So, again, this is recapping from maybe all the newer participants. A fundamentally strong company is any company which has been on an uptrend for a long time. If you notice, this was taken 2008, and currently it's at 87,000 rupees, the stock price of this company. And it over the last 10 to 12 years, it has continuously gone up, even though it has survived the 2016 fall, the 2008 fall, and even now the 2020 coronavirus fall, and it has still gone up. Like I said, it's right now it's at 87,000. So any company which looks solid on the graph, on the long-term graph, 10 to 12 years, is a fundamentally strong company. On the other hand, an example of a fundamentally weak company would be R Power. If you notice, again, this is a chart from 2010 to current 2020, and it fell so much continuously over the last 10 to 12 years. It has been falling, and this could be due to a lot of reasons: excess of debt, bad management, or a lot of other parameters. And currently, the stock price is at 3 rupees and 50 paisa, when 10 years ago it was over 150, 200 rupees. So generally, when you look at a chart and you see a long-term downtrend, it's company that you should be avoiding, right? Now, this is a quote that I really like about Warren Buffett. It says that if a business does well, then the stock will eventually follow, right? And this means that even if a company is undervalued right now, because maybe the world isn't seeing it, but if you do your research and if you find out that maybe the profitability is very good, it has no debt, the management is good, and in 5 years it will have a huge boom, then regardless of what others think, you should definitely go for it. So now let's get a little deeper into fundamental analysis. What do we need to be successful at it? The number one would be the annual report of the company. This has almost 99% of the information you will need for fundamental analysis. The annual report can be found on the website, and it can be downloaded for free, right? So anytime you want to check the annual report, just Google, let's say, Reliance annual report, and you'll be able to download the PDF version of their annual report for free. And you can, of course, analyze it, look at its all profit, revenue, income, cash flow, all of that stuff. But sometimes the annual report either isn't enough or you can't find it, right? In that case, you need to look for industry data and peer comparison, just to see how the company is performing with respect to the industry, right? Maybe this company is doing good, but some of its competitors are doing even better, right? Or something else related to the industry that's happened, and you need to know all this in data. So this would be the second most important thing that you need for fundamental analysis. And the third would be access to news. It is, regardless of what type of analysis you're doing, if you're in the stock market, I think it's very important for you to always keep yourself updated with current news and current affairs, because you never know what can happen at all times. So some of the apps that I use for news are Economic Times, Live Mint, CNBC, CNN, and these are the apps that keep me updated, not just India information, but globally. As we go down, I'll also tell you guys some sources where you can see the industry data and peer comparison from. So some of the three financial statements that we can talk about in detail over here are the profit and loss statement, the cash flow statement, and the balance sheet. Now, these three things are extremely essential and together make up most of the annual report of a company, right? The first one is the profit and loss statement. In the profit and loss statement, you will see the revenue, the expenses of the company, as well as the profitability. For example, if a company has 2 or 3 different products, right? One product could be performing bad, while other products could be performing really well. So this will show which profit is coming from which product and which product is more profitable compared to the others. I'll give you an example. Disney, everyone knows Disney, has theme parks, right? But they also have Disney Plus, which is their streaming service. So during this pandemic, all of the Disney theme parks were shut, but their Disney Plus was making so much of revenue that investors thought that this is a great long-term buy. And the price, which was in the low 70s, $70 per stock in March, is now in $170 per stock, even though the parks have been closed for the last almost about a year, 9 months. This shows that how important it is to understand and read the profit and loss statement. The next is the cash flow statement. This will show how much cash is generated and the liquidity of the company. For example, if the cash flow is going out, for example, if your expenses or if your interest is a lot, right? If your interest on loans is, let's say, 10 crore rupees a year, and your revenue is also 10 crore rupees a year, your total is zero, right? And so the cash flow statement is important to understand where your money is coming from and where your money is going and how that money is coming, right? Through what format? Maybe it's through investments, maybe it's through products. It could be anything. And also the liquidity of the company, to see how liquid the company is, how readily available, how much cash is available at all given times. Third, last but not least, is the balance sheet. Now, this is also a very important aspect of the annual report or of a company. This will show the assets and liabilities of a company, right? Now, what are assets and what are liabilities? Assets can be counted as anything which produce money, which are a good thing for the company, while liabilities are usually things which remove money, take money, and are not good, right? For example, if you have 10 factories, which, let's say you're a car manufacturer and you have 10 factories, and these factories produce tons of cars every year, hundreds of thousands of cars every year. So each factory is an asset, right? But at the same time, if you have huge loans with banks, these are called debt, and these are liabilities because you need to eventually pay back these loans, right? So these are liabilities. So it is very important to know, how many assets a company has, how many liabilities a company has, etc. And of course, the balance sheet also tells how the company evolved financially over the last maybe 5, 10, 15, even more. It could be 50 years also, how it is evolving year to year. Now, this can be seen through the balance sheet by looking at, let's say 2017 profit and loss, and maybe the number of assets, number of liabilities. Then compare that with 2018. Maybe there was a 10% 10% increase in profit year on year. Then again in 2020, maybe there was a 30% increase year on year in profit. So this will show exactly how the company is doing, year to year, quarter to quarter, or longer timeframes as well. Moving on, coming to the ratio analysis. So this is a very important part, and this is what you and I use a lot, like the PE ratio or the book value. But we can break down ratios into 4 different parts. We have the profitability ratio, we have the leverage ratios, operating ratios, and valuation ratios. Profitability ratios are ratios which show, obviously the profit of a company. Examples of this ratio would be the PAT, profit after tax margin. The PAT margin is a version of the form of profitability ratio, and it can be calculated by profit after tax divided by the total revenue of the company. And that would show how much, PAT of the company is. Another example of profitability ratio is the EBIT, earnings before interest, taxes, all of that, right? So that's also an important ratio which is used. Second would be the leverage ratios. So now, what are leverage ratios? When you take a loan from a company, you need to pay interest on that loan, right? So any of the ratios which involve interest on the loans are known as leverage ratios. How far are you leveraged? How much are you leveraged, right? If you have taken, maybe if you're earning 10 rupees and you've taken 100 rupees, you're 1:10%, 1:10 ratio leveraged, which is usually not a good thing. So you should avoid such things. Next would be the operating ratios, and the finally would be valuation ratios. So for operating ratio, it would be about turnover, inventory turnover, and such other things like that. How much inventory do you have, and how much are you getting sold? How much is staying back year to year? And valuation ratios again would be the most important PE ratio, right? This is used to value a company. Uh, PE ratio is price to earnings ratio, which is the price of the stock divided by the earnings per share of the stock. And what we do with the PE ratio is we get a number and we check with the industry how high up the number is, how low the number is. And based on that, we can invest. If the number is very high, that means that the company is very overvalued. And if the number is low, that means the company is usually undervalued. So but I would say never go on just these ratios alone. Look at everything, look at the balance sheet, cash flow, the annual report, look at what sentiment is, look what the analysts are saying, all of that stuff as well. And finally, we can go on to the resources and the tools. What are the resources and tools which we can use for specifically fundamental analysis? Number one, of course, would be downloading the annual report of the company. This you can find online. Just Google anything you require. Just Google it. For example, Reliance Industries annual report 2020 or 2019. You can get it all PDF format. Some of the websites which I use personally are Screener.in, Treadline.in, and Money Control. Screener.in is probably one of my favorites. It has everything that we have talked about in the last 15 minutes. All of that can be found on Screener.in for every single company, along with peer-to-peer comparison, industry data, and it also gives you an option to make your own ratios and compare other companies based on that. Treadline is again similar, and so is Money Control. So if you do need any help checking out any of fundamental analysis, do check out these. And third, again, I use this a lot, is Investopedia. If I come across a tough word or something which I don't understand, I immediately go to Investopedia and I Google it. Or I go Google it and then go to Investopedia and I try understand what exactly it is, right? That tough word or that jargon. And Investopedia can be used really perfectly for that. So I think that's it. Thank you, guys. If you guys have any questions, feel free to go in the Clinified Discord server, and under the finance, you can ask your questions, or you can DM me and I will reply.
Yeah, I'll just put the finance channels link in the chat.
Sure.
So that people can go there.
Yep. So on the chat, you can see the Discord finance channels link, and feel free to ask any questions you have over there, or we can discuss this on chat also on the Discord server.
Hi.
Hi, man.
Hi, Shreyans. So I watched you and Harish's video of the start, which you recommended, Velocity by Zerodha, that module that is there in. And when I started it, the first chapter that is there, the first module, Introduction to Stock Market. For the first couple of chapters, it was it was easily comprehensible. But after that, when I was going to the next chapters, things were getting slightly complex because it was getting technical. So can you just suggest, like, for the start, like, this was very like, the information that you shared today was really helpful and it was shared in an easy manner. So similarly, where can I go to little bit at the basics level to understand more or less the concepts properly?
So what would you like to learn? Basically, like basics you understood, like fundamental technical analysis.
Yeah, basically. Am I audible?
Yeah.
Yeah, okay. So basically, I want to learn that, like, the basics of the stock market, like the PE ratio, the bear bullish, and the basic things first. and the organizations being responsible from the government. So these things, and to understand the functions. So where can I go more or less to at the beginners level to understand all those things? It will take some time, but can you suggest me some sites or some videos?
Sure. So if you go to Investopedia again, and just like you want to know more about ratios, let's say PE ratio, all of that. So if you just type in fundamental analysis introduction on Investopedia, there will be multiple modules or courses. Some will be paid, some will be free courses, and that will explain in detail, all the different ratios, what they're used for, and complete from the scratch, from beginning.
Okay, thank you so much, and it was really nice today.
Seen your video, you and Harish were talking about these finance and stock marketing a month or 2 months back, and I learned a lot from that video and referred to the all the resources that you guys gave, like the screener.in and everything. Every resource was same basically which you gave today.
Yeah.
So I went through it, and I also went through a Udemy course and all that. And recently, like 1 week back, I started investing. So I started with the TA stipendship that we get. It was my first month stipendship, so I invested it. So after investing, like for the first day, I earned 72 rupees. If I tell exactly.
Yeah.
But today I was facing a difficulty that I bought the stocks of Tata Motors, and what happened is it was on hold, and at the end of the day my stocks got cancelled and I was not allotted the stocks. Can you tell me why it happens? Because it happened to me yeah, it happened to me once day before yesterday also.
Which broker do you use?
Zerodha.
So when you buy the stock, what type of order do you place? MIS, CNC?
No. Long trading, CNC.
Okay, CNC. And do you do limit order, stop order? What type of order do you place?
I buy at the market price rate only.
And still you couldn't buy the stock?
No, I don't know why. If you want, I can show my Zerodha screen also. Like I can share my screen.
No, it's fine. I believe you, but I think that this was a glitch. I don't think that this is an issue on
if
your
I
side.
can add on to it.
Yeah.
This has happened with me. I mean, my cousin, and the mail or the thing that he gets is that the person couldn't complete his order, that is his sell order, and hence he couldn't get that particular stock. I don't know much depths of it, but that is probably what happened with you.
I didn't get what's the exactly point.
I think he means that there's a lack of liquidity.
No, actually, I transferred the funds today only. I added the funds of around 3,000 and I bought 10 stocks for 250 per stock, and it amounted up to 2,500 approx. So some extra fund was there also left too, but still I was not able to buy the stocks. I don't know why.
I think you need to give T+2 days. You have to wait between you make two transactions, because 80% of the transaction stays. So you have to wait 2 days after transaction for the money to formally come into your account, and then you can use it again for another transaction.
Okay, it can be the reason, I think. Yeah, because I sold some stocks today in the morning, and then I went for buying the Tata stocks.
Yeah,
so I think it might be the reason. Yeah.
Yeah, I think that's it.
Okay, thanks. And yeah, it was great talking to you. And the last YouTube video which you guys uploaded was really helpful, man. It was really helpful. Thank you for all the resources and everything.
Thank you, man. Sounds good to hear that. Do you guys have any more questions or anything?
Bro, as a beginner, which book can I read as a beginner?
If you are starting off, then I would say start off with something very interesting. Otherwise, finance can get very boring. If you go directly into some book, you might get a little bored. I would say start off with maybe the biography of Warren Buffett. That is something that I really liked, and that was one of my first books that I read, because that showed the story of how Warren Buffett was a small kid. He started buying stocks, how he got interested. So I would suggest that book. If you want to go more advanced, then The Intelligent Investor, One Up on Wall Street. These are some of the books that Liar's Poker. Any books by Roger Lowenstein? He's a very good author, so you can read books by him.
Okay. Thank you so much.
Hey, you guys know any club of bits which we can join? Like, is there any club which any student from any Pilani campus can join?
The Wall Street Club.
Okay, so actually I joined this year only and we haven't been called up to the campus till now, so I don't know much about it. Can you just tell me how can we like join any club or what's the process behind it?
That varies from different campus to campus. You'll have to ask your seniors what the process is.
Okay.
But I would suggest joining the Wall Street Club. It is really great. A lot of the seniors are very helpful. And to everyone else also, different colleges, if you guys have a finance club or a stock market club in your college, do join it and talk to seniors, ask them dumb questions, ask them all your doubts, because they're the ones who will help you understand and, tell you where to go.
Yeah.
I had a doubt.
Yep.
Would you make web crawlers with Python to track your stocks?
Oh, yeah. I personally don't do that, but yes, you can. In fact, I think Alice Blue or Angel Broking are two brokers which support their APIs, and they support developers to build scripts on top of their platform to keep track of their investments and basically algo trade.
Actually, I was also interested in how botnet would affect the stock markets.
So right now it's not too much of a big scale. So the effect on the market is very small, but high frequency trading is something that affects the market on a large scale in today's world. By high frequency trading, I mean that, buying and selling thousands, millions, hundreds of millions of dollars worth of stocks in just a few seconds. And that is all done by algorithms. And so that does affect the stock market quite a bit. But we are yet to see that boom in India. That is more boomed in developed countries because of lack of infrastructure. You need very fast internet, you need uninterrupted power supply for long periods of time. So, but I think in the coming few years that will affect the Indian market a lot also.
Thank you.
Yeah.
Can you explain what that term was, botnet or something?
Which term?
You talk about something called botnet, right?
Okay, yeah. So that's basically it's basically algo trading and trading with bots, not with humans, right? So let's say you put in some factors in a bot, which will automatically trade for you, and you tell them that every time the price goes above this level, sell it, and every time it goes below this level, buy it. And so if the price keeps crossing, the bot or that Python or whatever you have will continuously buy and sell. So without human intervention.
Yeah.
And could we also implement machine learning with these if it was in the long run? Like I have some plans, but I'm not sure totally, but I plan to do this.
Yeah, it's
And
definitely.
machine learning and AI
Definitely.
with
Yeah,
botnets.
you could do
Can
that.
try some experiments.
Yeah, that would be really great. I think there are a couple of companies who are working on that right now. I think AlgoCart is working on AI quant and algorithm-based trading. So just you can try more. That's not my area of expertise. I'm sorry, so I'm not able to answer too many questions. But I think in the coming years, it's going to be a lot of we'll see a lot of advancement in that field.
If AI can beat a person at chess, I think the IBM bot which beat the human being, the grandmaster.
Yeah.
So is it also possible that AI will make smarter decisions in stock market?
Quantitatively, yes, maybe, but qualitatively and when it comes to sentiments, I don't think so. Because how can you tell a machine about fear, right? How can you make a machine greedy? And without those two things, you're missing the essence of stock trading. Fear and greed are what run Wall Street and because when people and plus and you need sentiments also. Without sentiments and feelings, emotions, it's difficult. quantitatively, yes, it can. And there are a lot of hedge funds which, employ algorithmic trading, and they are giving phenomenal returns. But there's a lot of issues with that as of now. Maybe in the future it's possible.
Hey Shreyans, just wanted to ask a follow-up question on that. Which investment app should you use for investing, obviously? And you said that you use Zerodha. I wanted to ask that, have you heard about that Groww app?
Yeah,
It's, I think, a common one, and it's a popular one and has like more users and everything. But recently they've announced that they're also launching this feature in which you can buy the US stocks and everything. And also it's like free. I think in Zerodha you have to pay like a $300 upfront fee for starting investing. So what are your thoughts about
actually, I interned in Groww back when I was finishing my first year. So yeah, Groww is a very great company. I would definitely recommend that. As for the US thing, I would say, why do you want to go into US market living in India? First practice in the Indian market and then maybe move on to the American market. But if you do want to go, then I would say maybe start with Groww since they're making it free and they're giving better features.
And in terms of like Indian market wise, is like Groww better option than Zerodha?
For beginners, yes, but Zerodha has more features compared to Groww. The UI is much more simpler on Groww. Zerodha can get a little bit tricky with a lot of different options when you're buying and selling, but it does have more features. Groww has a little bit less features, but I would recommend either one. Based on it's up to you, whichever one you would like.
Thank you.
Yep. Oh, I think Shabazz, what is your view on
Hi, hey Shreyans. This is Amisha. Can you hear me?
Yep.
Actually, I joined a bit late, so I'm trying to understand what's going on. Well, actually, I want to learn everything from the beginning. So, what would you recommend? Like, I should read the book that is suggested about Warren Buffett, or how should I start? That's my question.
So I would suggest three things. First, start with Zerodha Varsity. That's usually what I tell anyone who asks me how to start. They have some couple of basic beginner modules and they give decent explanations on how you can start. So Zerodha Varsity. Number two would be YouTube. There are a couple of good YouTubers like CA Rachna and other YouTubers who start from the complete scratch and who do teach, from the basics about stock market. And the third would be, Investopedia. Any doubt you have, any small issue you have, just go to Investopedia and search over there and you can get the answer. So I would suggest a combination of these three things. Zerodha Varsity, start first, then go on to YouTube and understand from good YouTubers. And in the meantime, if you have any doubts, search on Investopedia.
Okay. Thank you.
Yep.
Yeah. Shreyans, can you tell me like which companies are currently in your watch list?
In my watch list?
Yeah.
As of now, because the market is at an all-time high, I've not looking for investing right now because I think I'm waiting for another correction. Hopefully there is another correction, and that is why I'm saving my money for that. So I've kept a couple of banks. I usually invest in blue chip stocks. Okay. So just any of the big names, I'm just hoping that there's a correction in the near future so that they can provide some entry point. And once that happens, I'll be able to enter. And because as tempting as it is to invest when you see all the stocks going up, I would say have patience. Patience is extremely important in the stock market. Be a little patient because you don't want to invest when you're at an all-time high only to see everything fall a couple of months or maybe 6 months later, right? It could be anytime. So I would say just be a little patient. You will get a lot of chances. I think Club has asked in the chat, what is your view on Bitcoin for investment? So Personally, I haven't invested in any Bitcoins, but I think that there is a lot of scope for Bitcoin in the future. In fact, JP Morgan recently put out a target of $146,000 per Bitcoin in the next few years. And along with that, a lot of big institutional investors, big banks have started to invest in Bitcoin and have opened up such things as Bitcoin mutual funds, where instead of investing in the traditional stock market or equity or debt, they invest in Bitcoins. So all of this will cause a big inflow of money into Bitcoin, which will, of course, increase the prices. There are some concerns, regulation, all of those things are concerns, but I think in the future there is scope to go up.
What are your opinions on Monero?
I'm sorry, I'm not sure.
Actually, Monero is another cryptocurrency.
Cryptocurrency, yeah.
It's like it has better encryption than Bitcoin. So when funds are transferred, like in Bitcoin, when funds are transferred, they can be easily traced back by anybody. But in Monero, what happens that they have a 3-key system of encryption, by which when you transfer the funds, they cannot be traced back. So it's like an anonymous cryptocurrency, totally anonymous.
Mm-hmm.
So what are your opinions on that?
See, I don't know much about Monero. I know it's a cryptocurrency. I've heard about it, but apart from that, I'm not sure. Maybe it does have higher level of security, but then, maybe in the next few years, 5-6 years, we'll be seeing tons of cryptocurrency that will have, a lot of features, better encryption, better privacy, better security. So we just have to wait and see how this whole thing plays out and then jump on the trend, I guess.
About what you just said recently, that you also feel that the market is really overvalued right now. I do feel that, but then recently I came across a quote by which is often accredited to Buffett, but what it really says is that it's better to spend time in the market as opposed to time the market. So don't you think that this feeling that the market is right now overpriced is kind of like contrary to that advice or thing?
See, this was Warren Buffett's quote, as you said, right?
Okay.
Warren Buffett also has another quote: "Be greedy when others are fearful. Be fearful when others are greedy." Right. So that contradicts what you kind of just said. There's right now everyone's trying to be greedy. People are buying. All retail investors. 2020 saw the highest number of trading activity, highest number of new retail accounts being opened, and that shows that every small person, every investor like you and me want to start trading. That shows there's a little bit of greed happening, right? If my friend made 500 rupees in stock market, I'll also want to make, so I open a bank account. So that's why I'm tending to be a little fearful right now. But then again, there's no one strategy that works. Some strategy that works for you could fail for me and vice versa. So I would say, if you want, go ahead, but just be careful and be cautious, because historically, whenever there's a high, there's always been a low close to that.
Mm-hmm.
How to find good companies, as there are too many companies in Indian stock market? How do you choose your companies and which to invest in? As a beginner, I don't have any idea about the stock market, how it works. I'm still learning, but how do you choose a good company?
Okay, so when I first started off, I was reading this article, how Warren Buffett chooses stocks, how he used to choose stocks, and that really stuck with me and changed how I choose stocks. So this is for beginners mostly. When you start off, before you make your first few investments, just look around you and see which companies do you see on a day-to-day basis, right? Maybe you brush your teeth and use Colgate. Maybe you drive your car and it's a Tata, or maybe you go and buy electronics from Reliance. And look at these stocks and try to track them in the news. So this helps in two things. One, they're known companies, right? So you already know something about them and you don't have to start from scratch. And number two is, because you know them, you also know what they sell, how much they work. Maybe all your friends also buy their TVs from Reliance Digital. or maybe all of your friends also use Colgate toothpaste, right? And that is why if you look at some of Warren Buffett's initial investments, they were Coca-Cola, because he used to go and drink Coca-Cola on an everyday basis, and all of his friends loved it. And he thought that if I like it, if all my friends like it, then there's something good about this company, right? So I would suggest that when you're just getting started off, look for big companies, because they have lesser chance of going bankrupt, right, and completely coming to stock price zero. First of all, second, it's something that see around you, and it's easier to track, especially in the news or with your friends, family. But I would say look for big blue chip stocks initially, something that you use on a daily basis, and just track them for 1 week, 1 month, and slowly you'll understand how they move with the earnings report, how they move with quarterly sales, all of that. Once you understand the pattern, it becomes much easier. Oh, someone asked, can you explain a bit about blue chip stocks? So blue chip stocks is just another name for stocks of big known companies. There's two types: there's blue chip and pink slip. Pink slip stocks are stocks of smaller companies, which are 10 rupee stocks, 5 rupee stocks, 20 rupee stocks. Those are pink slip stocks. And blue chip stocks are stocks which have huge market capitalization, maybe 100, 200, 500,000, 2,000 crore market capitalization, known companies, all of that stuff. Yeah, guys, I think we'll wrap it up. If you guys have any more questions, you can ask here, you can ask in the Discord finance server, or you can, personally DM me. Anything's fine, whatever you find convenient.
Hey Shreyans, have you ever invested in renewable energy sector?
No. To be very honest, no.
What do you think about it? Because the changing trend from natural conventional energy resources to energy sectors, this renewable sectors, I believe that in 2021 it's going to be a boom, because after this pandemic and everything, people have seen like if we like we should not cut down the forest, deforestation and everything. We have seen it. So I believe that renewable energy sector will grow up in 2021. What do you think about it?
I think that's also true. I think eventually we will have to, realize that the earth is limited and not unlimited. And at some point we will have to make the switch into renewable energy. And I think it's a good investment for the future. But just do some research before and find the market leaders, find the companies that have good vision, who have the right management, who have the right 10-year plan, 5-year plan, because that I think will be very important when it comes to something like this.
Yeah, like I was looking at Tata and they were going to launch the vehicle Pravag, and Indian people are very excited about it. And when Tesla launches in India in the end of 2020, and Pravag also, so middle class and low class families will be going for Pravag rather than Tesla, because Tesla is going to be much high, having a much higher cost than Tesla. So people would prefer Pravag over Tesla, I think.
Definitely, Tesla will be very expensive. So yeah, I mean, I think you should deep dive, do research, and definitely go for it if you think it's good. I think it's will be good investment over long term.
Cool, guys. I think we are, done with it. Shreyans will wrap it up.
Yeah, sure.